A couple of months ago, I made a video entitled Why I Never Sell Properties That I Purchase. And I made this video because I am a long-term buy and hold investor of real estate. I like to buy properties, I like to hold them long-term and collect the cash flow, okay, which is the difference of the rent that I'm getting minus the mortgage and any of my other expenses. What's left is the cash flow. Well, 2 days ago, the Federal Reserve announced that they were going to raise interest rates by 0.75 percentage points, which means we're about to see another hike as the consumer in our interest rates. Because of this given scenario, I've had to change up my strategy a little bit, and I'm going to explain in this video what my change is and why I feel as though it's beneficial for me to go this route other than the route that I was previously taking. Let's go. Hey, what's going on, guys? Welcome to NYM. This is a channel dedicated to wealth building and financial literacy for the younger generation. My name's Christopher Bell, and the Fed, they pretty much, they did exactly what everybody was expecting. They rose the interest rates again, okay? They decided we as the consumer, to combat inflation, are going to have to pay more on our mortgages. All right, so what does that mean for me as an investor? Well, basically what it means is I'm paying a lot more in mortgage. I mean, that's pretty much what it comes down to, right? So with the BRRRR method, if you've watched my other videos about why I never sell properties and the videos that I've done on the BRRRR method, you'll understand that with the BRRRR method, you buy a property, you renovate it, you rehab it, or rehab, renovate, same thing. You rent it out, you refinance it, and then you repeat the process, okay? I'm going to take you through a scenario that'll better help you understand where I'm leading to in this video and why I chose to go that route. So the first thing that I'm going to do is I'm going to lay out the scenario, okay? So basically what I would do is I would buy a property for $75,000, okay? When I buy that property for $75,000, I could renovate it for about $25,000, all right? What would happen is I would be all in, out of pocket at $100,000, and then I would go and refinance it for the new after repair value. I would go to the bank and say, hey, I've got a property, I need a mortgage on it, okay? It doesn't have a mortgage, I paid it in cash, and they would say, okay, Chris, we'll give you 80% of what the property is now worth, which would be around $150, and we'll give you that in a check, and you pay us back in 30 years. Okay, so basically what would happen is the bank would give me 80% of the 150, which would be 120, right? They give me a check for 120, I put my 100 back, and I pocket the other 20, and basically from there, the tenants would pay that mortgage. All right, via their rent, okay? So let's say that mortgage is $500, and I charge the tenants $1,400 to live in this property. Well, you're looking at about a $900 difference between the mortgage and the rent that I'm charging those tenants to stay in that property, okay? After I pay all of my maintenance fees, or I put money away to the side for maintenance, and after I allot for vacancy and I pay my property manager, you're basically looking at about, let's say that's about $400 off of that $900 difference, okay? So let's say that's about $400. My cash flow on that property is $500. Now, this is all assuming we were seeing historically low rates. So this is all assuming you get a solid interest rate, because yeah, your mortgage might be $500, okay, at 3.25% interest rate, 30-year fixed. All right, but when we start talking about 5.5%, 6% interest rates, that mortgage is going to go up, which inevitably is going to diminish the amount of cash flow that you are seeing, okay? So given that you get that situation and you understand that as interest rates go up, mortgage rates go up, us as investors, we are losing in cash flow. So as long as you understand that principle, you'll understand why I decided to go into this new direction that I'm going in. Well, I'm not gonna say that I'm going into a new direction. It's more so I'm throwing a wrench into things, okay? I'm throwing a little curveball into the way that we've been doing things, and I'm gonna break down what that is next. So basically I will buy and hold these properties, and if I'm getting $500 a month in cash flow after expenses and mortgage, I'm doing pretty good. 500 times 12, you're looking at $6,000 per year in pure cash flow. You're not paying taxes on that because you get to depreciate the property, okay, over 27 and a half years, and the property increases in value. Okay, so we all know that properties go up over time. All right, of course, appreciation has been absolutely ridiculous in the past 2 and 3 years, but it cools down. But even when it does cool down, you'll still see some form. Typically, if you purchase right in the right areas, you'll typically see about 3 to 5% appreciation. Okay, so what it boils down to is, given that scenario, being that I'm now forced to refinance at higher interest rates, just such as 6%, it makes my profit margins go down. So I've always discussed why I don't flip properties, okay? And this whole scenario is related to me personally, guys. So I don't want you to do what I'm doing. I don't want you to not do what I'm doing. You have to make up your mind for yourself, be your own decision maker. This is just what happens to work best for me right now. So I've said before, I'm a nurse. I took off the entire summer from May until September. I'm going to Italy in August. I just got back from the beach. I spent the whole week at the beach last week. Like, we've been chilling. All right, life's been good. All right. So given that that is said, I had money saved up that I didn't plan on touching. I said, I'm just gonna spread this out over the summer. Okay, we're prepared to take the entire month or the entire summer off, the 4 months. So I started thinking about it. I said, well, man, I really want to retire this year. It's gonna be my last year as a nurse. What should I do? And it came to me. I was gonna take one more contract until I land my next deal, my multifamily deal I've been working on, just trying to find multifamily properties. And I said, well, listen, what if I was able to make what I would make as a nurse? We do 3-month contracts. What if I could make that by flipping a property? So I really started to run some numbers, and I decided that it would definitely make sense to start flipping properties, okay? Now, ultimately, this is gonna depend on you and your goals. My goals, long-term, are to retire at a young age, okay? And have passive income finance my life. That is my ultimate goal. But until we're ready for that, in the interim, right now, right, while we're still actively pursuing real estate, which I'll always be actively pursuing real estate, but I mean at the rate that I'm doing it, right? I figured, why don't I just flip a property, take the profit and live off of that? That way I don't have to go back and be a nurse, okay? Instead, I can focus on securing more real estate. It just makes sense at the end of the day, especially given the interest rates. So, for example, let's say now, because interest rates are so high, that $500 profit you're seeing is now about $250, okay? Because your mortgage went up substantially. So let's say you're seeing about a $250 cash flow per month, okay? If it was $200, you're making $2,400. Just rough math, let's just say you're making $3,000 a year. If you can do a flip on a property and make $30,000, $40,000, and that's after capital gains tax, which are gonna be 10 to 35%, depending on which tax bracket you fall in. After capital gains tax, after your realtor fees and closing costs, if you can do a flip and you can pocket around $40,000 to $30,000, I definitely see substantial upside to doing that. And here's why. The main reason is because, one, you get your money right now and you're not locked into a terrible interest rate, okay? Now, you could always get the interest rate and refinance later, but there is no telling when the Fed will reduce interest rates. With inflation as high as it is, I don't see it happening anytime soon, okay? So with that being said, you need to figure out what you can do to make it work in your benefit. So I said, listen, I've been trying to secure a multifamily property. I'm talking like 24 to 32 units is what I'm looking for. And that will throw off enough cash flow to where when you combine it with what I currently have, I could easily just say, hey, I'm done with nursing for good, right? But until I find that deal that I'm looking for, because I don't want to settle, especially again, these high interest rates, the deal has to make even more sense now given the high interest rates, right? It would make sense for me to flip a property here and there in order to sustain cash in pocket so that I can focus more on real estate and not nursing. I love being my own boss. I love making these YouTube videos for y'all. And I was like, you know what? I could just go and flip a property. I'm already doing the BRRRR. I did the update on the BRRRR Monday, this Friday. I did the BRRRR update. So I'm still doing that. But somebody brought a property to me and I said, man, I could probably just do a cosmetic rehab on this property, 20, 25K, and increase the value by $75,000, $100,000. Okay, so when I saw that, I saw it as an opportunity to not have to lock in this high interest rate, and I could get some cash flow or some cash today. All right, to help me avoid going back to nursing. So I always said I would never sell properties. And I even made, like I said, I made the video about it. I wanted to come in here and clarify because now, and I'm still new in this, guys. Yeah, I have 9 houses and I just put an offer in on the 10th, but you're always growing as you learn different strategies in real estate. And what I found is sometimes it just makes sense to sell the property, flip it, man. Like, why would you wait 10 years to get the profit that you could get today? And this is after tax, okay? I understand depreciation, appreciation, principal pay down. I understand all of that. That's some of the benefits for holding your property long-term. But given the current climate, sometimes if your profit margins are super thin and your cash flow is just not substantial, it may be more beneficial to not wait to get the profit over 10 years that you could get today. And then you be responsible, right? You invest that money, you save it, or you put it to the side for your current lifestyle expenses if you're like me and you're self-employed. And you can just kind of grow from there because your time is your own. All right, so I just wanted to once again jump on and clarify and say, hey, I'm about to start flipping properties, okay? If the deals that come my way make more sense to flip, I'm 100% not going to be against it, because at the end of the day, we're in a money business and we're in a business where we have to do what's best given the climate that is pretty much just out of our control. Okay, guys, so I hope that helped. I hope that gave you some insight as to where I'm going with my own personal real estate journey. If you haven't done so already, please like this video and subscribe to the channel. I definitely appreciate each and every one of my subscribers, man. I'm going to be putting up a lot more content, more updates on the BRRRR property that we're doing currently. And fingers crossed, if I get my offer accepted on Sunday, they said they're gonna wait till Sunday, of course, right, to accept an offer. If we get that property, I'll be posting some footage about that as well. And that'll be interesting because it'll be our first flip that we've done on this channel. So thank you all so much for watching. Please, again, subscribe, and I will see you all in the next video. Thanks, guys.